Join the server. All right, so Anthony Pompliano is about to join the Fractal server.
Says he's stuck in a mobile phone confirmation loop.
Doesn't sound good.
This is Justin Khan and Brent from the Fractal team.
I have a feeling his Discord handle is just going to be Pump.
That's what it is, yeah.
Oh, I see him. Wow, it's literally just Pump. That's amazing.
Okay.
Okay, wait a second.
Anthony Pompliano has joined the Fractal Discord group. Where is he?
Get him to come to VIP launch. Can you DM him, Justin?
Yeah.
I'll tag him in like a general chat as well.
This is the Fractal Gaming NFT exchange. We have Anthony Pompliano coming in for a VIP chat with Fractal holders. So if you have one of the Fractal NFTs, you get to participate in different meetings with different VIP influencers, I guess. So we've had, let's just make sure I'm still in the chat. Yes, I am. We've had Gary Vaynerchuk come on the show.
Oh,
We've also now had Emmett Shears, the current CEO of Twitch. And obviously we've got Justin Khan presently in the call, who was the co-founder of Twitch. And now Anthony Pompliano, is hopping online in a sec.
Pomp, I've invited you to come up to stage.
There he is.
Yo, hello? Pomp, can you hear us?
Pomp's, he's a Bitcoin maximalist, is what people tend to say. So it's mostly about investing in Bitcoin. So it's going to be very interesting to hear this discussion take place with Justin Khan,
audio
and Pomp.
And mic are disabled, from what I can see.
Pomp can get his side working.
People
Right, you guys got me?
There he is.
Yeah, we can hear you now.
Amazing.
Oh, there we go. My bad.
Amazing, Pomp.
How are you guys?
Welcome, brother.
You want me to record audio, video, everything?
Yeah, if you could record everything and we'll get it from you after, and then we'll publish it on YouTube.
Right.
That'd be great.
You know, I don't know what I'm doing, but I can try my best.
No worries.
Send the video through.
All right, good to go.
All right. Awesome. Well, I'm super excited. Pomp, thank you so much for joining our Fractal Discord server and having a chat with us. How are you doing today?
I'm doing great. Thank you guys so much for having me. I'm super excited about this.
Amazing. So we're going to do like a interview about you. I'll have a bunch of questions that I prepared, and then we'll do a few audience questions if that's all good. But I'd love to start like with, you're a crypto icon right now. You have your own crypto pizza. Everyone looks to you for like crypto advice, and I want to go back to like, how did you get started in crypto? How did you find out about it, and what got you so excited?
Yeah, well, first of all, people should definitely not listen to anything I have to say. I always joke that my opinion nor anybody else's actually matters. But I was working at Facebook in 2014. We hired David Marcus, former PayPal president. He came over and he just kept talking about Bitcoin, and I didn't know anything about it. And he was talking about remittances, and he was taking over the messenger team, and so cool they do payments, etc. I just turned to an engineer on my team and I was like, hey, what's this Bitcoin thing? Is it real? And he was like, no, it's stupid. So I literally didn't Google it, didn't do anything. And then from there, I ended up not really hearing about it, thinking about anything until kind of mid 2016, maybe Q3 2016. And a young kid, JP Barrick, pitched me on the idea of mining, but he didn't really pitch me on what I would call like the crypto story. He more so just pitched me on like, hey, you know about data centers. My father had been in the data center business for like 40 years. And this is basically just like a souped up data center. So, you don't need a sales team to go and find customers. The unit economics are better. You don't have to go into a super expensive kind of tier 3 data center. There's persistent demand for the power. You're also not mining dollars or receiving dollars. You're getting this cryptocurrency, et cetera. And so I started, learning more about it. And I, at the time, did something that I thought was either smart or stupid. I sold all my Facebook stock. I put 50% in cash in the bank, and 50% I went and I bought a bunch of mining rigs. I was mining with GPUs at a hosted facility in Washington State. And Ether was like maybe, I don't know,
Mining.
8, 9, 10, $15, somewhere in that range,
Wow.
kind of early 2017. And it was like interesting, but it was kind of like a cash flow type investment. Again, like I wasn't really, I think, kind of exposed to like the crypto story, right, or the Bitcoin story or the Ether story. It was more so just this data center kind of cash flow.
That was
And
me.
then from there, I ended up going ahead and mining some Ether. The price went from like $10 to 30 to 100 by like May of 2017, if I remember correctly. And when it got to maybe like $100 or so, I was like, oh my god, like I should start paying attention. And then I made a genius decision. I sold basically all of it at like $150. And lesson learned to maybe never sell anything in this industry. But that was pretty much how I got started, and from there, I didn't really look back.
Amazing. And so you got into that was so funny because I think I learned about Bitcoin around the same time. I got excited around the same time that David Marcus did, because we had this mutual friend, Wences, who's an entrepreneur, who was super into Bitcoin. And he was like telling all of us that we should, invest in Bitcoin. And I think that's like when I first heard about it, like really thought, oh, like someone smart really thinks this is a thing,
Yeah, he's a legend, man. He probably will never get credit, but from what I understand, in those early days, the Fortress guys all the way down to entrepreneurs and venture capitalists, Wences did a lot of kind of the early, orange pilling, if you will, of Silicon Valley.
Yeah, he definitely did. So what are your views on Bitcoin and ETH now? Are you like, I'm really curious, like what your views are on ETH, and then what your views are on other chains like Sol. Fractal is a Solana project, and I got really excited about Sol, but like, how do you think that this space is going to evolve in terms of, how these chains are going to, like, which chain is going to win in the long term?
Yeah. So I think articulating the framework that I use to evaluate that question is probably helpful here. So I wrote a piece publicly, I don't know, a couple months ago now. And what I titled it was Monetary Maximalism and Technology Competition. And the idea was in the creation of blockchain technology to solve a very specific computer science program, we essentially kickstarted two different revolutions. One is a monetary revolution and one is a technology revolution. Monetary revolution is this idea of kind of a non-sovereign monetary asset that Bitcoin seems to be not only winning, but pretty much unaffected or unfazed by any level of competition there. And so when you think of monetary assets, our natural end state is maximalism when it comes to monetary goods. So, if you live in the US, you get paid in dollars, you save in dollars, you invest in dollar-denominated assets, you pay your taxes in dollars. So you ultimately end up being a dollar maximalist. And so I think that the way I look at Bitcoin is that natural end state of this new digital monetary asset that is winning and likely will continue to win the monetary revolution. Now, the other half of the industry, or other piece of the industry, is this technology competition or this technology revolution that's underway. And I think this is where you have all these smart contract platforms, you have all of like DeFi, NFTs, etc. And so if you think of, for example, let's just take Ethereum, Solana, Binance Smart Chain, maybe as like three examples of many more. And what they're really competing on is innovation and who can have the fastest throughput, who can have the cheapest fees, who can serve the technical need the best. The difference between the technology revolution and the monetary revolution is the monetary revolution, you actually don't want change. You want predictability, you want security, you want kind of this rigidness to it, this protection of your purchasing power. And the less you change, the better, because you become more predictable. Whereas that's true in monetary revolution. Technology revolution, if you don't change, if you don't kind of innovate, you get left behind. And so what I think that we've watched play out here, and it's still kind of up for debate as to who will be the quote unquote winner, or if there will only be one winner versus multiple winners, is we're watching multiple sets of developers, ecosystems, etc., all vying for who has the technologically superior system. And so, there's trade-offs. If you look at Ethereum, the Bitcoin community would point at the Ethereum technology and say that's not as decentralized as Bitcoin. Ethereum's community would then turn and point to Binance Smart Chain and say that's not as decentralized as Ethereum. So you get just trade-offs between decentralization and kind of technical performance. And what it reminds me of is like centralization is actually like a really, really effective thing in business. Amazon is efficient because it's centralized, because it has a hierarchical structure. And so I think what we're going to discover over the coming years, I don't know if we actually have an answer for this yet, is how important is decentralization in the technology kind of revolution, and how much do developers care? How much do users care, right? Do users switch from Twitter to decentralized Twitter if there's feature parity? I guess is probably not. But if there's a 10x better Twitter that has network effect, and oh, by the way, it happens to be decentralized, then maybe they switch for that reason, right? And so I think that we're kind of like watching this play out. But anyone who says like they've got the answers, I would caution them that I think we're right in the middle of this thing, and nobody knows what's going to happen yet.
That's a really good point. That like maybe one of the things that plays out is that different use cases require different levels of decentralization because you have different levels of kind of what's at stake or trust. Like I could see like with DeFi, it being on Ethereum, like the Ethereum not being super efficient, it might be like perfectly fine. If you're doing these like larger transactions, you want like a certain level of decentralization. Whereas, something like gaming, what I really liked about Solana was like the really low transaction fees. And, I think with gaming, you're going to want a lot of different assets, millions or tens of millions of assets flying around. But maybe the stakes aren't as high, and so people are willing to like take that trade off.
Yeah, and I think the other piece of this too is decentralization. I always laugh, like the regulators, they keep saying the terminology DINO, like decentralized in name only. And they're obviously trying very specifically to get at something when they say that. But they do have, I think, some merit to their point, which is decentralization has become a marketing term in this whole space. And there's like a sequential evolution to decentralization, right? Let's hold the assumption that Satoshi Nakamoto was one individual person. When the first code was written and published, it was quote unquote centralized. Very quickly, they worked to decentralize it, both in terms of technical structure and also getting it into the hands of as many people as possible, and also Satoshi walking away and yada yada whatever. So I think that it's really hard to judge the early days of a project or a piece of technology against the kind of mature phase of another one. But also the beauty of the early days of Bitcoin was no one was really paying attention. Right? It was kind of like it was sent to an email list, and like nobody was really kind of scouring the world for the next project. Now, everyone from a hedge fund to venture capitalist to literally, men and women sitting at home, they're all looking for what's the next one, right? What's the one that I can participate in? How do I make money? How do I participate? How do I create technology? And so I think it's harder to launch now than it was then, just because you've got more attention. But it also brings the question of like, what should be decentralized? And I think that there's like a trade-off between security and performance. And if you really think about most technology, security is not the number one pursuit. actually technical performance. Like imagine if we were like, man, Amazon is so secure. It takes 20 minutes to do a transaction across AWS. Be like, let's go find something else, right? And so I think that it's just, you know, I understand why people are pursuing the decentralization, and I understand how kind of the marketing plays into it. I just really question how much of this needs to be decentralized versus are you better off just saying, hey, look, we're using a new piece of technology. There's still some centralization risk like you have in the old system, but it's not a technology kind of upgrade. It's actually an economic incentive upgrade. Like NFT is a good example. If you have a professional sports team and you create the tickets as NFTs, I don't think the pitch is like, hey, we have decentralized tickets. I think instead it's like, hey, we now have technology where we can monetize the secondary market. And so now the teams and the leagues really like the secondary market of trading tickets, and the economic incentives are aligned. And so it's better for individuals, it's better for the teams, it's better for the leagues. And whether it's decentralized or centralized doesn't matter. It's just there's an economic kind of upgrade that ends up actually being where the value resides.
Yeah, in a way, the decentralization there is really, like you said earlier, it's kind of like a marketing way to get, or a technology plus marketing in order to get people to accept a certain kind of like new business model, maybe. Like because NFTs, like most people are, using NFTs through their very centralized platform. Like, I mean, Fractal is a centralized platform, or so is OpenSea, right? And they might buy these images and like never really understand that, like look into whether they're truly decentralized or not. It's like but the idea of decentralization and this kind of like like ownership of this digital provenance that you have enables them to like have this belief that they're buying into this, they're supporting an artist in this new way that they wouldn't have before, and so that it seems like this is the technology has led to this business model innovation and this kind of like cultural acceptance of something new.
Yeah, and I think that like that's okay, right? If I look at both sides of the argument, so let's go to like the hardcore Bitcoin maximalist argument that would reside or maybe like end up in them just yelling scam, 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 right? What I think they're trying to do is I think that they're trying to basically say like, hey, it's not really decentralized, and so it's like quote unquote misleading marketing. Now, maybe that's harsh, maybe it's not, I don't know. But at the same time, if you actually kind of unpack what a lot of these projects are saying and doing, is they're saying it's decentralized. I actually think what they mean is it's distributed. So like, it isn't centralized in the way that kind of Web 2 was. It's also maybe not decentralized in the way that Bitcoin is, but it's distributed to a much greater number of participants. And therefore, that leads to a change in kind of the economic hierarchy that changes the way that people are able to capture value, create value, etc. So like we're super deep in the weeds of like vernacular now, and like maybe it doesn't really matter. But I do think that there's a obvious difference between like the Web 2 and Web 3 stuff. There's also a difference between like the Web 3 and Bitcoin. And like that's okay, because ultimately the winners of like this free market are going to be the things that end up providing value. And in the short term, that's really hard to identify. But over a long time horizon, how many things came before Ethereum and are no longer in the top 25 of like a coin market cap? Ethereum's still there. No. So it's like very obvious that like somebody somewhere in the world finds that valuable. Right. And like, I don't care what you think, what your kind of financial portfolio looks like, whatever. It's like you can't argue against the fact that there is hundreds of billions of dollars of economic value that's been created. There's millions of people holding an asset, and maybe they're all idiots and they're all going to lose their money. But my guess is that like things in motion stay in motion, right? And it's unlikely that it's going to go to zero.
100%. So how do you evaluate crypto projects, and how do you look at like new projects now?
Yeah. So I basically take a barbell approach, which is I've got the Bitcoin position, and I pretty much have resided to I'm never going to sell it. I'm going to like hand it to my grandkids one day, and just from a psychological standpoint, it's just a long-term hold. I joke all the time that like it's kind of like in the culture of India, where they pass down the gold from generation to generation. Like that's kind of how I think of Bitcoin, and if my daughter sells the Bitcoin, like I'm gonna be super pissed, right? If my grandkid sells, I'm gonna be super pissed. Right?
I
But
love that.
that's my thought process around Bitcoin. Everything else, like I pretty much just like go to like the farthest end of the risk curve, and it's probably surprising to a lot of folks because I don't really talk about it publicly. One is I think like got somewhat of a responsibility when you've got like this really big platform to not be like the kind of asshole who's like, oh man, look at this new token, and then all of a sudden it goes down 80%, and like a bunch of people who didn't have the time to actually do any research, they just saw somebody that they know talk about it, and then they went and bought and lost money. Like, I try to avoid that. Two also is like I think there's a lot of uncertainty on the regulatory front. And so what I don't want to happen is like all of a sudden something is seen as a security, and then you were promoting an unregistered security, etc. So I can pretty much just publicly talk about Bitcoin because I think that's kind of the safest thing, both from a regulatory standpoint and also from a kind of the largest market cap asset, etc. I've got a pretty big portfolio of things that really have just over time replaced what was early stage investing. So where you used to invest in, equity of a technology company, it was pretty much driven by access, among venture investors, et cetera. Now it's just being replaced by other, what are essentially early stage companies. They're just projects. And rather than buying equity, you're buying some digital asset. And sometimes there's direct value accrual. Sometimes it's unclear and they've got to figure it out. But by building that barbell, I feel like I've got a pretty conservative position on the Bitcoin side, and then I've got probably the highest risk in either technology or finance investing in the long tail of assets, and that kind of balances out to something I'm comfortable with.
How do you evaluate crypto projects versus startups? Like if you were investing in startups, there's you have a bunch of legal protections with you're investing in a company and like shareholder rights. When you're investing in a token, what are the red flags you look for? Like what are the there's a lot less. It's kind of like more the Wild West, right? So like how do you think about that kind of evaluation?
Yeah, so the short answer is like I don't have a great answer. I think that we're kind of like evolving over time. We're learning a lot. I would say that from a psychological like peace standpoint, I've essentially just gotten to the point where I'm like, all right, I'm gonna build a portfolio of I don't know 100 deals over a 12 to 18 month period, and if somebody steals my money, like they're an asshole. I obviously wish that didn't happen, but it's very unlikely that I'm the one who is going to go spend a bunch of time trying to track it back down. And so when you think about from that perspective, you don't worry about that as a risk in like the legacy, kind of early stage. Like I don't think I've ever heard of a venture capitalist investing in an early stage company and the founder literally just draining the bank account and leaving, right? And so here
it's happened once or twice, but very rarely actually.
Yeah, I'm sure it's definitely happened, right? But like here, like that happens more often than I think people want to admit. And so I think that's one. It's just understanding like the reason why there's so much asymmetry from a financial return standpoint is because you're taking much, much more risk than you would get in other opportunities. So you just have to be comfortable with that. The second thing is whether I'm right or not, I still put quite a bit of importance on the people. Even if it's, going to be a DAO or it's going to be decentralized or distributed or whatever. It just, to me, like, I think that leadership matters. And I think that you ultimately want to back the right people because everything else is going to change. So one of the things I learned in, kind of early stage investing, which just, I know you've spent a bunch of time and I've talked about this publicly a lot. Everything changes. Competition changes, product changes, market conditions change, like literally everything. If you just bet on the right person at the earliest stages, they'll figure it out. I think that that's still true here, right? And so I think a lot about that. And the last thing is I try as best I can to be very disciplined around seeking the asymmetry. So a lot of times what will happen is like somebody will come to me and they'll be like, hey, you should invest in this thing. We think it's 2 to 3x. It's like, that's great. And it probably is. That doesn't fit this part of the portfolio, which is supposed to go seek the highest degree of asymmetry. And so you've got to be pretty disciplined to understand that you're seeking the highest risk, because we're not innately like wired to go do that. We're all really risk averse, and we got to fight it. And so, if you look at it and you're like, all right, if I can find the right people, if I understand I'm taking tons of risk in terms of not having like the investor protections, and then also go find like the craziest, most asymmetric, potential opportunities, and just go build an index of them and know that this is balancing what most people in crypto would consider a pretty conservative portfolio with the Bitcoin. Actually, this is important. Bitcoin is, to me, it sits at the intersection. People on Wall Street think it's the riskiest thing they own. People in crypto think it's the most conservative thing. And like, that's actually where I want to be for majority of the portfolio, right?
Yeah, that's interesting. It actually took me a long time to realize that and learn that about startups, which is, you are looking for that asymmetric return. And if you just, if you spend time on the things that are safe businesses, or, it's kind of like an obvious Me Too business of like applying, one business model to another, and it's probably going to make money, but it doesn't have the opportunity to be really, truly that like 30, 50, 100x or more. It takes a lot of time, and it takes you away from, things that could be asymmetric, and it's kind of a distraction at the end of the day, especially if you're composing that part of your portfolio that's the riskiest, kind of highest alpha part. And the other thing that you mentioned that was really interesting to me was it's all about the people. When we've been doing, like with Fractal, we've been doing a lot of games, right? Like the point of Fractal is to be a game platform for NFTs. And so for us, we try to do a lot where we talk to our do like interviews with all of the game companies, the game studios and designers, and like expose that to the people on Fractal so that people can learn from learn more about the people behind these projects and make their own decisions on whether they want to support them or not.
I think that's right. And what's fascinating to me is like the speed at which all of this is happening is absolutely breathtaking. I don't think that we all appreciate it because we're in it every day. But if you just look at like what the story was 2 years ago at the start of like this pandemic to now, the progress is insane. And so like continuing to do that, what you guys are doing, it's like a full-time job, right?
Mm-hmm.
Yeah. I mean, we're basically like we have a marketplace and a media company. There's a lot. It is a full-time job. I know you know a lot about like the content creation side, and it seems like you're running a full-time media company yourself. I don't know how you find the time to invest.
I think that the world has changed to some degree. In one way, everyone exaggerates the change, in another way, they underestimate it. But like friction and the barriers for anyone to invest has obviously come down significantly. But I also think that there is a significant risk to the legacy venture model. Like, without naming any names, I talk to people all the time and I said, look, if you're like a tier 2 or tier 3 venture firm, you always lost to tier 1s. Now you're losing to like individuals. You just like can't catch a break. And so there's only going to be more individuals, more, whatever. And I think that there's going to be two other themes that will become more popular. One is I think there's a whole class of crypto investors that are going to start transitioning from direct investors to LPs, which we haven't seen really in the tech world that much. But I think that that's something that we're definitely going to watch play out. And the second thing is I think that we're going to start seeing a lot more of people giving back like institutional capital, because the things that they need to invest in now just don't fit into those institutional buckets. Imagine going to a pension fund and being like, by the way, we're going to invest in this DAO that is a pseudonymous founder. We've never met them. We don't know where they live. We don't know their name. And oh, by the way, we're going to literally send them digital stable coins, and they're going to send us this token thing. And the only place that we can buy and sell it in the beginning is on a decentralized exchange where if something goes wrong, we can't call them up and have them help us. The institutions are like, dude, we're out. Right?
Yeah. Well, it's interesting. The comfort level of all this institutional capital to like get into these crypto funds, or like now I have friends who are raising funds to invest in NFT projects and all these like or like crypto gaming assets. Like there's so many different non-traditional assets that like the traditional LPs are like not able to wrap their heads around. And I think that'll be that will probably be a transition that happens over the next 5 years, kind of like it did for Bitcoin. And when that happens, this huge amount of like all these assets will continue to grow, probably.
And I think that what we're going to ultimately have to see is that a lot of these institutions are just going to take blind bets on fund managers. Right? Yeah. Like in 2018, I was part of a
Working
team
on some
that
NFT
we raised
data.
Capital from the first two public pension
Stockers.
funds to invest in a dedicated like crypto-focused fund. And it was fascinating because the only way we could get them to do it was we basically were like, all right, we're going to put 80% of the capital in venture capital investments, and 20% we're going to buy Bitcoin. And they were like, well, what about this Bitcoin thing? Even though it was a small minority position, et cetera, that was the hardest part to get through. If we had gone to them and been like, hey, we're going to buy all liquid assets, they'd be like, no way. I think already that's changed, right? We're over 3-4 years, later. And to your point, I do think that that's changing, but I think that I don't understand it to the degree that they will at some point in the future. Right now, it's basically I'm just betting on a fund manager. At some point, they're going to have to understand it. And like, at what point do the institutions? Maybe we have a couple of endowments, maybe that have made like direct token investments. Right? I think we've got maybe one or two public pensions that have done like direct token deals. But like other than that, like that's pretty much it, right?
Yeah, it is. I mean, it's very, very hard for them to get on board with something new, right? Like they're kind of almost by definition like the slowest moving capital allocators. So there's probably there's that the bridge is the people who are really talented at like explaining things to LPs and building that kind of like institutional fund like the Paradigms or something like that who will be able to like kind of bridge that gap in capital. But you think that there's going to be a lot of crypto native LPs popping up, and that will like inspire the next generation of fund managers?
I think the deeper in the weeds you are, the more you realize you can't keep up yourself. And so, I do this all day long, right? There's no way I see everything. So at some point, people start to transition some of their portfolio to being an LP because they're going to try to find managers that can find areas of the industry that they just don't see or that they don't have access to or, whatever, right? And so it's like 2017, maybe 18, even into 2019 probably. Like I'd actually argue maybe even into like the summer of 2020. It was like Bitcoin and cryptocurrencies, right? And like that was all one industry. That was all like tied together, highly correlated. Now, like there's Bitcoin, then there's like the layer ones, then there's like layer twos, then there's DeFi applications, then there's NFTs. Like you're starting to get some fracturing of the industry. So look at like a funds like a kind of administrative organization. It used to just have like 2 GPs and they could like invest across the ecosystem. Now funds have an NFT person. They have a DeFi person. They have a yield farming person. They have a smart contract person. Like you're starting to see specialization, and that's really just a sign that the market is maturing. And there's so much stuff in each one of these specialized kind of verticals that you need somebody focused on it full time, or you're not going to be able to be good at it.
Yeah, it's crypto is now such a broad. It's kind of like everything, right? It empowers all these different types of industries on top of it, and so you need a bunch of different investors who are specialized in order to have coverage. I mean, I guess I've kind of followed the path that you're talking about, where I've LP'd a couple of crypto funds because they're in areas where I don't really care that much, or I'm not the specialist, like DeFi, like I don't know, and I don't really want to learn that much. And so it's better for me to just invest in someone else's fund, whereas I'm more interested in the consumer applications.
Yeah, and I think also it's like, not only do you not care, but like are you and I actually suited with our skill set and experience to underwrite trading smart contracts on decentralized exchanges? Like I'm not, right?
Yeah.
What about, when you start to look at like all sorts of like what I would equate to like Wall Street exotic financial instruments now just being brought into this digital world? I'm not an expert on futures. When you say to me you're building a decentralized futures platform, like maybe, I don't know, I got to ask somebody, right? And be like, hey man, like, is this real? So at some point, it's also just understanding like, what do you actually understand? What are you good at? Focus there. And then there's still ways to get it, like financial exposure to the other stuff. But it takes, if we pat ourselves on the back, we're intellectually, humble enough to know what we're not good at. In reality,
Yeah.
we just realize, over time, like, hey man, I really suck at underwriting this shit, and I got no clue. So like, maybe I should find somebody who does, and I'll just give them money, and they can do it.
I 100% agree. So have you thought about like what areas are you interested in? Have you thought at all about like blockchain gaming?
So I've invested in a couple of different things there. So we did YGG.
Okay.
We
Well,
did
so you
Salad
games.
Ventures. We did a couple of others, MetaGods, a couple of these things, and they're relatively small checks, except for one of them, and it's been something where I'm like, the games that I played growing up, I think have a lot of impact on like your interest level. And so, for example, when I grew up with my brothers, we played like GoldenEye 007 on N64. We played Madden, and like maybe the earliest games I remember was playing like Sega Genesis, playing like Sonic the Hedgehog or something, right?
Yeah.
Those weren't the games that I would equate to somebody who maybe grew up on like computer games, or the games that I think we're seeing built now. So like the gaming pitch, I'm not as interested in, just because that's never been my thing. Like it was usually more like sports or something that like that I played. I am interested in, so take like the whole like Axie YGG thing. There's like an economic empowerment story there that's fascinating to me. What you're really doing is you're like changing the nature of work. Does it work over a long period of time or not? I don't know, right? Like if it doesn't, then I'll lose money. If it works, amazing. But I do think that like that to me is intellectually interesting, which is if all of a sudden you can now say like anyone in the world can go ahead and can earn money in exchange for doing something, and it doesn't matter where they live, what their education level is, their wealth level, what language they speak, etc. It's fascinating. And I think another kind of cut of this is like, is it going to be like, take Axie as one example, and then maybe take let's see, maybe take there's a
I'm still not sure about that.
oh sorry, there's a podcast app that I invested in called Fountain. And so if you take, let's say, Axie, they basically created their own ecosystem. They created their own token. They created kind of their own game. And like, it's like this whole, enclosed ecosystem, and you earn the tokens in that ecosystem. That's in comparison to something like Fountain, where you basically are able to pay podcasters in Bitcoin. Like, is the winning model to create all new digital assets for your ecosystem and have it specific to your world, or is the winning model to like incorporate Bitcoin into a model, but you're using like this decentralized digital currency? Here's the capitalistic perspective. Most investors are just going to invest in both, because whichever one of those two wins will pay for the loser. Right? So it's like almost in some way you shouldn't even try to be smart. Right? When it comes to like predicting the future, you just want to be able to understand what's playing out and make sure that you have exposure to both, because the payoff in the winner is so asymmetric.
How do you think? I totally agree with that. Like one of the things that we've seen is all sorts of new digital work pop up. Like Twitch would be an example, or I guess like people selling NFTs, artists selling NFTs. Like those are forms of like digital work, but it's mostly been creative work thus far. And then what you're describing with Axie and some of these other play to earn games is like kind of like maybe more menial work in a way. And I'm curious how you think that that kind of work will evolve online, because I'm sure we'll invent new things for people to do and continue to, but I wonder if like, well, is Axie the way it'll look, or is there going to be something different that's like in a gaming environment or not?
Yeah, the short answer is I don't know. But I do think that we're watching an evolution, and in the idea of like work, understanding that it's an evolution, not a revolution, I think is important. So I don't know. Let's just use an egregious example. So 50 years ago, people went, they worked at a large corporation, they worked there for their entire career, and they literally, were a company man, right? And they got their, 20, 30, 40 years logged. They had their retirement ceremony, they had their pension, and it was game over, right? Then I think we moved from that model to like now maybe you didn't stay for 40 years. Maybe now it's like you had 3 jobs and you stayed for, 15 years each. And now, like, I don't know, young people switch jobs like, every 2 years, right? Every year, whatever. And then the types of jobs changed. So we went from, kind of your corporate in office. There's obviously the remote trend, but like podcasting, YouTuber, TikToker, Twitch, Instagram model, like, yeah, I mean, you just go through all that. Then you get into like Shopify, Gumroad, Amazon reseller, like all that stuff. Then like the natural extension of that evolving type of work is then you like, now we don't sell physical items. Now we sell digital items. So like NFTs is like a perfect example. How many influencers / creators were previously held kind of ransom? The only way to monetize was either via ad deals, via very low monetization on like a YouTube, or like selling shitty merch. Right? Yeah. And like, how many of them were able to figure out like, all right, how do I get a t-shirt made? How do I do logistics? All that stuff. Now it's just like, bam, I press some buttons and I sell people this digital good. Now, again, when you reduce the friction, that means you're going to get an abundance of those goods. And so like the odds that it all ends up being successful is very low, right? And that holds value, but there will be some that end up being valuable. And so I think that's where we're just watching this evolution continue of like, I don't know, like I think a lot of it. Here's a stat that I think about like too much, which maybe says more about me than anything. There's 10.5 million open jobs in America. The unemployment rate right now is 3.9%. If the unemployment rate is so low compared to like historical norms, you would expect there not to be that many open jobs. Like, where did everybody go? And like, my only answer is like, they're just working at things that aren't being counted. And also they're not filling the legacy jobs. And so you have open jobs, but people are still employed. It's like, yeah. That's just like data that suggests like the world's changing. Now, how do you invest? What does that mean? Like, oh, that's all up for debate. But like, those two numbers shouldn't be like that if you were looking at it, according to the old world.
Yeah, it's just reflective of this like evolutionary transition to people doing non-traditional jobs, probably largely online.
And I forget the exact stats. So, somebody here probably knows what it is, but I think it was in 2020. It was the largest number of new company creation in like 2 decades or something, or maybe in a decade since like the global financial crisis. Yeah. So like ultimately, what happened? Like people lose their jobs, and it's like shit. I can't find another job. All right, well I gotta like make a living to provide for my family. So they start companies. How many of those people in the middle of the pandemic were starting companies like, I'm going to open up a coffee shop with a physical location? Probably not that many, right? Most of them probably are like, damn, how do I sell something on the internet, right? How do I, do something digital rather than in the kind of physical world?
Yeah. All right, let's switch to some audience questions. So I've got some here from the chat. Metaslinger asked, who is the smartest Pomp brother? I don't know if that hits a little too close to home, but you can say yourself.
Oh, no. Actually, so I've got 5 brothers. Most people know my 2 youngest brothers. They do a bunch of stuff and work with me on a daily basis. So Joe and John, they're obviously highly intelligent. We have another brother who works on Wall Street at a pretty large credit hedge fund. And then we have a middle brother who's actually an orthopedic surgeon. And so, although nobody knows him, I'd have to say the middle brother. which is kind of a cop out answer because nobody knows who he is, but definitely him because I don't think I could even get close to passing medical school.
I mean, he is an orthopedic surgeon. That's incredible. All right, hats off to that pomp.
Yeah, it makes me feel real dumb sometimes.
All right, I think we brought Loru up from the audience. Loru, do you have a question?
I do. Thanks again, Pom, for taking the time.
Of course.
Yeah. So you're obviously huge on Twitter. Got a casual 1,400,000-ish Twitter followers, and social media. Me being a marketer, social media person, I'm extremely interested in that kind of aspect. You use Twitter a lot. Is there a favorite social media platform besides Twitter that you use for like the education and the advocacy of all the things that you're about?
Yeah, like Twitter, frankly, probably because I'm just addicted to it. If we're all honest with ourselves, which probably not good. I think each platform kind of brings its own thing. I haven't been able to get myself on the TikTok train, so like I don't know, maybe I'm just old or haven't spent enough time there. But I'd say probably the two things that I find for myself the most value is in the daily email or in the podcast. The podcast is like super selfish because I get to ask, what questions I want to ask of really intelligent people. And so it's very kind of extractive. It just happens to be that I'm, publishing it to a bunch of people so that there's some value for the guest. And then the letter forces me to like really clarify thoughts. And so it's a great like exercise every day. It's like sit down and just write about something. And some days are better than others, but I would say those two are probably like my favorite. I don't know if they're necessarily the most effective or whatever, but those are the two that I find the most value in.
Gotcha.
Right,
Thanks very much.
And LaRue, the other thing I'll say is like Twitter somehow is just what LinkedIn should have been. Like
Right.
Twitter's value is really just in like all the networking and all that stuff.
That's a really good way to put it, actually. I do Twitch, YouTube stuff, that kind of thing. And even with that, I prefer Twitter over LinkedIn, even for marketing and business things, because you get the real people. I feel like, it's not just the business face you put on. It's the real you, it like exposes who they are instead of just showing their business side. So thanks.
Of course.
And thanks,
All right,
Justin,
next
and
up.
for the time.
Yeah, thank you, Loru. All right, social prescribing. You're up next.
Hi everyone, can anyone hear me okay?
Yes.
Okay, thank you so much for the opportunity to ask this question. Shout out to the Fractal team. So my question to Pom is based on your knowledge in the crypto space and being one of the influencers. How long do you think it will take for the healthcare professional to start adopting blockchain games, such as, for example, Genopets, to prescribe to patients in order for them to improve their health and well-being, in the process get rewarded tokens, and then in the long run having like crypto project or blockchain game associated with the WHO. So for instance, the United Nations SDG 3 for good health and well-being. So it's a big question, but I just wanted to get your grasp and speculation how long it would take for healthcare profession to be comfortable starting to prescribe those similar to Headspace with Web2 as an example.
So before I answer this, I want to explicitly call out that I have no clue if the thing I'm going to mention here is real or not. I just Googled it, and one of the first things is Sweatcoin legit or scam? So that maybe tells us everything we need to know. But there was an attempt at this previously. That's what I was looking at. Back in like 2017, if I remember, somebody tried to basically create an app that was like, if you take 10,000 steps a day, you get like an economic reward. If you do this, you're going to get an economic reward. If you sleep 8 hours, you get an economic reward, whatever. I think it's going to happen. I guess my big question is just like, are people going to change their behavior? Well, yeah, sure, if you pay them, but can you actually make it sustainable? That's probably something I'm less convinced of at the moment, just because it's almost like the more successful you become, the less likely it is it becomes sustainable. And then the last thing is the medical community, I think, is very risk averse. and they're
Test
risk
1, 2,
averse
3.
because they've got plenty of medical risk. When you start to live at the intersection of like medical advice and
Checking microphone.
or like securities, etc., I think that there's probably a much longer road to that becoming the norm than most people realize. So, like, I don't know, like it'll happen. Just think that it's going to take a while. And then again, it goes back to like, are people going to be using, exercise coin or sweat coin or whatever the hell these things are? Or are they just going to be like, hey, we'll pay you some Bitcoin or stable coin or whatever? I don't know. But it's interesting to think with an economic incentive, you could change behavior. And like, is it better to change exercise behavior? Is it better to change eating habits? It's probably a combination of all of it.
I
Thank
actually
you.
was a small investor in Sweatcoin, and it has been surprisingly more durable than I ever thought. I mean, I guess I invested in it, but like it's they have, I think, hundreds of thousands of people still using it, and it's a profitable business now. The paying, you kind of have to like, they found creative ways to like pay people to do it, which effectively it's like a marketing thing for those advertisers that are providing product to the users. So it's like kind of a, it's a lower cost for them, right, to like provide the free stuff for the users. But I also heard there's like there are national health experiments where people are like, I think in the UK, right, like where people are paying for to direct payments to patients to change their health outcomes, or experimenting with that, which I think it's interesting. The durability question is a good one, but I do think it works better than I thought it would, to be honest.
And that's what it was, right? It was like you basically like worked out and got paid to.
Yeah, it was like you walk, and then you get points for your steps, and the points were translatable into like prizes. You could like buy stuff with your points.
It's like it's easy to see that once the technology gets there and that's like easy to do, people will come up with all kinds of ways to change behavior, right?
Yeah. All right, YHH, you're up next.
Hi, Pomp. Hi, everyone. It's great to be listening into this great conversation. I guess my question is more related to DeFi, and I'm wondering, with the yields in DeFi being very attractive, and a lot of people are talking about, all these different coins and the different high yields and strategies they can undergo. I'm wondering, once adoption starts to really take off, with these yields set to like, get lower and lower, do you see a point where these yields become non-existent, somewhat similar to a savings account, or do you think the risk will always keep the yield higher?
Yeah, I mean, if you just think of market structures in general, higher the yield, the more incentive it is for people to join. The more people that join, the lower the yield should go, right? It gets like commoditized. Like think of banks, for example. Banks used to not offer 3 basis points on your savings account. It's just that there became an imbalance of deposits versus their lending opportunities. And so I think that it's less about like crypto and it's more just market structure. And let's take yield as an example. Yield is just the signal for supply and demand. And so if something has high yield, it is essentially paying people to join. And as more people join, it goes down. So I tend to think that all of these high yield, mechanisms, if you will go lower. Now the question is, if you start out at 1,000%, APY, lower could be 250%, right, for some period of time. But I don't know if there's like a one size fits all piece of advice there either. I think it's case by case on what people are building.
All right, thank you, YHH. I think we have time for one last question from Joe Smart. If you want to unmute.
Hi, Pomp. Hi, dear Fractal team. I like to ask you, Pomp. I know this is so early, and if there is an change from the Ethereum blockchain whales moving to Solana blockchains, it's like a signal that anything good is happening in the Solana chain. How do you see, or what can you expect of this kind of movings? Thanks.
Yeah, so look, I think when it comes to Solana, there's a balance between the technology and like what I'll just call community, right? In some way, an exchange on an exchange, liquidity begets liquidity. So once you get liquidity, all of a sudden more and more liquidity shows up to trade, which then kind of further cements you. You see this with Binance, FTX, etc. Community can beget community as well. If you show up and like nobody's there, you're just yelling into like an empty room, you eventually leave. You're like, I'm going to go spend my time somewhere else on the internet. But if you show up, and whether it's developers, whether it's people building applications or any other kind of role, and there's tons of people there and they're all engaged, then you're likely to stay. And then because you stay, the next person that shows up, there's even more people. And so I think a lot about like the technology is what everyone focuses on. But again, going back to this conversation around decentralization or centralization, is if the tech works, how important is all of those nuances versus, and like what is superior versus no, it's just whoever builds the right community and kind of like liquidity, etc. I'm not sure. I don't have the answer, but I think about it a lot.
Awesome. Thank you.
Thank you.
Well, that was we're out of time. Pomp, I want to be respectful of your time, and thank you so much for taking the time to talk to us. I learned a lot. Actually, it was amazing.
Thank you guys so much for having me. I'm excited that we did it, and we'll have to do it again sometime.
Okay. All right. Thanks a lot. And for the rest of you joining, thank you. See you later.
Yeah, I missed out on asking a question, but hey, that's completely fine. Let's just make sure I'm not in the chat anymore. Yeah. So getting back to some vaxxed doggos. Let's make sure I didn't. Yeah, cool. Yeah, so currently what I'm actually doing and what I was doing in the stream while listening in, just trying to do a bit of a rarity check on these vaxxed doggos that just recently came out. Just to try and see if there's any floor priced or doggos selling for floor prices that, wow, prices dropped a little bit. That could be considered rare. So let's do a rank. So essentially I'm trying to just do it based on simple probability. Let's make sure I didn't get any responses from community. Cool. Oh, good. Equals. One, two, three, four. Make sure there's no formulas there. Mistyping. Cool. So we have a rank system now. What I can do, actually move the rank over next to the mint numbers. Redo my filter for posterity. Do a VLOOKUP. Select the range. It's weird I can't select the column to define a range. Final lookup. Again, let's just copy that. Equals VLOOKUP, the value below us, looking into this range and returning. I did that wrong. No, I want the mint number to be on the far left. That's what we're looking up on. Oh, what am I doing? Okay, I'm doing another range real quickly. Find name range. Final lookup again. The quick dirty lookup. Doggy. So if I put a number here, 22, this is my rank. You can use that as a reference. It's purely based on the probability of actually getting one of these if they've got rare attributes. So if I quickly go down this list. I'm going to miss all the cheapest ones, so I might go down a little bit further. Just go 1824, 239. Oh, this is not ideal. What I should do is very much not ideal. So equal VLOOKUP. This. Oh my goodness. Get the table name. Do the check from the right to the left. Right. Much better. Now what we do, get rid of this weird coloring. We can just spam in some dogs that we see for sale. So I'll refresh and scroll down a bit because all the top ones are probably sold. So 1960248. Just quickly pass in a bunch of these and in real time get their rarity results. So just copy the formula down the list. 17. That one was 2488. Go again. 2187, 1300, 1466, 1873. It was a top 10 percenter. 429, 1789. 1986, 1726, 1798, 2089, 758, 1571, 1658, 1425, 1239, 219. Not a top 100 yet either. There's this one. Let's go further down, see if there's any that we can snipe just to get one rare. 276. One 173. Okay. 1821. So this guy, let's sit there. Might grab him. He's 99 from my calculations. 14. $518. It's top 80 apparently. Doesn't look it, but it's hard to know these things sometimes. Whoa, 2120. Did I do a typo? Get out of town. Buying that straight away. Rank 2. Get out of town. Ay. He's rare because he's missing some accessories. Probably shouldn't be ranked as the rarest. I'll take him. $1784. Also nice and rare. Gee. Some of these are mega rare for what reason? Just because I'm missing accessories or what? Shirt none, hat none, accessory none. What's the data set? Some of them don't have shirts at all. What do I... Sum total of 5,000. on shirt, but he's got none. What? Shirt none doesn't sound right. I mean, I can just look at my data sheet. I exposed it? Not here. This JSON file essentially holds the metadata of the NFT. Paste it into the browser. Shirt. Type shirt value none. Ah, okay. So none, 950. I have to wonder if I got my maths the wrong way around during the meeting. I reckon I did. Yeah, I did. That's actually the higher number is the better rank. Because I would have had to have done a rarity score of 1 minus. Cool. So in my sort list, we actually need to look at. I just bought the second least rare booty. So awesome. All right, so let's take a look at these. Top 300. How annoying that my rank is the wrong way around. So 1459. Right, that 1459 corgi. This guy's apparently pretty rare. But let's go for 2482, which is 380. This is apparently a pretty rare one. Not listed. I totally missed it. Ay. Oh my goodness. Alright, let's keep going. So we're looking for the high numbers. Equal if that is greater than, if that is greater than 2400, then bye, else blank. That's funny. The least rare, because I wasn't paying attention. How funny. I can search by mint number in here. Accessory, body, filters. No, I don't have a filter option on that. I don't have mint addresses here either. One, 293 is pretty up there. Three 071. It's kind of cool as well. I don't actually know what the community consensus is. I haven't looked in the chat from Juma either. If any of these particular properties give you certain exclusive benefits. Hey, the golden corgis. 807. The mask. Getting a bit pricier as well as we go down the list. Really wish I had a mint number searcher. What I might do is just load up the whole page and do a control F on the highest scores. In this instance, it would be the lowest. Mint 4412120. How many up for sale? 20%. There's no 441. There is a 2120, which is the one I thought I bought. Yeah, so it is this order here. Ah, this mint number became disconnected. So, let's get this right. One two zero. Why is it so rare in my calcs? Having lower score would be better. Not higher. Yes, this is what I'll do, is change this numbering system and then we're all good. Focus and don't focus. Alright, rank 7. Yeah, 1920 looks good. Six. 6 is very cool. Okay. Why are we getting on this? Pencil. It's 8. 2149 is rank 4. It's very expensive. Well, one's not up for sale. 1276 number 2. Just the one. Only 10 soul. Let me look up Joma. Alright, peace out, guys.